Hello guys, welcome back to a new video. In this one, I'm going to share with you my scalping model that is entirely based on dtfx concepts. So, this scalping model consists of two main time frames. The first one is the 1 minute time frame as our higher time frame, and the 5-second time frame as our confirmation and entry. So that means that this model is exclusive for futures, right? You can't use the 5-second on CFDs because of the spreads and the commissions. So this is only for futures, all right? But of course, you can use two different time frames if you want to trade CFDs. So for example, the 15-minute and the 1 minute time frame, or the 1 hour and the 5-minute time frame, or the daily and the 1 hour time frame. So it doesn't matter. But in this one, we're going to focus on the 1 minute and the 5-second time frame, because this is the model that I use every day to find setups. Now, few points that I need to address before I start this video, and this video is going to be a little bit long because I want to be comprehensive. First of all, this again is based on dtfx teachings. That means that you need to watch the master class, because although you're going to understand this model because it's easy and simple, but you will not get the entire picture. All right, you're going to be mechanical, and that's not. You need to know the narrative and the logic and the context of the trades rather than just looking for patterns. All right, the other thing that I want to clear is that if you are a Forex trader, so personally I still trade Forex, you can use different time frames for this, and you can find this playlist that I have here on my channel, and here I shared this strategy with higher time frames like the 1 minute and the 5-minute time frame. All right, so make sure to check this out if you're not a future trader. Now, even if you're not trading futures, you're gonna find this video helpful because all you need to do is to change the time frames, and because the concept is the same. All right, so price is fractal. All right, so now let's talk about the structure of this video. First of all, I'm going to show you the model itself, and this model is divided into two setups, as you can see here. The same concept, but this one is with the trend, and this setup is counter trend. So the structure of this video is going to be as follows. I'm going to show you these two setups with a high overview, so only line drawings. All right, I'm going to share with you all the filters and the rules and the variations, the stop loss placement, the TPs about these two setups. Next, I'm going to share with you my examples, both live examples, all right, live trades that I took using this model, and backtesting results. All right, so I also have backtesting results here. As you can see here, I have other journals, but I'm going to focus on this journal right here. And these setups are just from like 2 days or 3 days of data. So as you can see, 31 setup. And also, I'm going to analyze these trades with you. So I'm going to talk about all the filters and the rules and the possible enhancements that you can add to the model. All right. So as you can see here, this model is based on 1-to-1 trades. It has a really high win rate. And you can also see that the potential RR, so this is where I close the trade, and this is where my trade went way above my TP or below my TP. So, as I said, this model can be divided into two setups. The first one is going to be with trend, and we're going to use a higher time frame zone or swing point, or an SNDR, and a lower time frame flip, a 5-second mark such a shift or a flip. This would be the confirmation. The second setup is going to be a counter trend, as always, the 1 minute as our higher time frame, and the 5-second as our lower time frame and the confirmation. Now, during the day, if I get like 10 setups or 12 setups, 80% of my trades would be with trend, right? And the rest would be counter trend. Now, with the higher time frame zone, I'm going to give you all the possibilities or the variations that you're going to face when you trade live markets. Also, with the lower time frame flip, I'm going to give you all the possibilities and the variations that you will face and how to deal with them. So let's start with this one, with trend, a higher time frame zone, lower time frame flip. So let's see that the market is trending like this. All right, creating lower highs and lower lows, and then we shifted structure, and now we are trading higher. So as you can see here, this is a downtrend, and this is an uptrend, right? Now these are swing points, as you can see here, as I explained in my previous videos. After price creates a new low, it tends to pull back into these swing points, right? And then continue lower. And now here we have bullish swing points, right? We have this. Let's not draw this. I don't want to make the chart messy. So these swing points are 1 minute zones. This one is a 1 minute. So basically this is a 1 minute chart. I'm not going to use the 5 minute or the 15 minute in this one. All I'm going to use is the 1 minute. All I'm going to use is the 1 minute. Sometimes I will use the 5 minute. All right. But for me personally, I don't trade big expansions, right? I'm only looking for a 5-point, 10-point move from these areas right here. And price can give me that. So although maybe this zone will not hold, right? Price will just run through it. A lot of times it will give me a small rejection from here, and I will get those 10 points or 5 points, all right? So this is why I mainly use the 1 minute time frame. So with this setup right here, I'm only going to trade with the trend. So here I am in a downtrend. What I'm going to use is whenever price taps into here, into the previous swing point, I'm going to drop into the 5-second time frame, and I'm going to look for a flip or a market structure shift. So basically something like this. All right, same thing in this area. Once price retraces to here, I'm going to look for this pattern right here, for the flip pattern to continue lower. All right, now when price changes the trend and shifts the structure, right, now we are in an uptrend. Once price returns to the previous swing point, we have a swing point also here, right? I'm going to drop lower on the 5-second time frame, and I'm going to look for this setup right here. So it would be something like this. And I'm going to show you later on my trades, and they all look the same, guys. They all look the same with slightly difference between them, but the main idea is this. All right, here also, and then here also. I'm only trading with the trend. So this is the basic idea of the setup. But now let's talk about the details and the variations of this model or this setup. So here, let's talk about this one right here. A lot of new traders will wait for price to return to the 50%, the top on the 50%, and then they will look for this pattern right here, the flip. Now that's fine. You can wait for the 50% to get hit, but you need to understand that price doesn't always hit the 50% and then trade lower. Sometimes it will just trade to here and then continue lower. So you can stick with the 50% and you will get a decent number of setups per day. But for me personally, how I use this setup is that if we have an SNDR here on the left, all right, then I will look for the flip inside that SNDR. All right, so the SNDR is the area responsible for breaking structure, right? So this down move is going to be like this, and as you can see, we're trading lower, and this Forex right here is the area responsible, right? I hope you can see it. Now let's make this as you can see here. All right, so this area is the one responsible for breaking structure. All right, this swing point is the SNDR, and a lot of time price will retrace to the SNDR, right, and then trade lower, continue lower without tapping into the 50% area. So if the SNDR is below the 50% area, I will wait for price to hit set. I will zoom in, right, once price reaches that SNDR, and I will look for that pattern right here. If there is no SNDR here and price, or maybe price didn't give us that flip, then I will simply wait for price to return to 50%, and then I will look for that flip again. Now, this is the first variation of this setup. The second variation is that price will hit this SNDR. It will give us this flip, and then I will get in. Price will give me that 1-to-1, and then it will reverse, right? Price will reverse, violate this SNDR, hits the 50% of this swing point, and then it will give me another flip. Now, in this case, I will take that setup again, because a lot of time this swing point right here can have two tops. The first top, it will give us a quick scalp, right? These are all from the masterclass. And the second top will give us the expansion lower. So these are two scenarios that you're going to face when you use this model, when you backtest this model. Now, another variation is that price will tap into the 50% area. It will give you a flip, and then that flip will fail. So that's a fake flip. Now, if I see this, I will not ditch this swing point. No, I will not ditch this area. I will wait. I will monitor price here after that fake flip, and if price gives me another flip, then I will take it. And that second flip is a high probability. All right, a lot of times when price will give you a flip, a fake flip right here, and then it will fail. All right, and then it will give you another flip. That second flip is the one that will send price lower and create a new low. That's another scenario that you're gonna find. So as long as price does not violate this high, I will still looking for shorts. All right, because maybe there is unmitigated areas somewhere around here. So these are the variations that you can see on the 1 minute time frame, right? Now let's talk about another variation that you can see, which is on the 5 second time frame that you're gonna use, that you're gonna look for that flip. All right, so let's zoom in here. Now this is the pattern that we're gonna use on the lower time frames to confirm our idea, right, of going lower or going up. But you're gonna face different variations of this pattern right here. The first one is going to be like this. Price is printing higher highs and higher lows, and now we shifted structure. We broke the low or the protected low that created the new high. Now how I trade this? If this leg right here, the last leg before the break of structure, is relatively small, right, as you can see, or short, I will take my trade once price close below this low right here, and then I'm going to put my stop loss here, and I will aim for 1-to-1. This way I will ensure that I will not miss trades, because a lot of times price, once it breaks this low, right, it will not give you that retracement. Sometimes it will not give you this retracement, not all the times. But if I see that this leg is short, I will enter directly when we close below this low right here. I will put my stop loss here, and in most cases it will give me like 7-point or 10-point stop loss, and I don't care if price will retrace to here or not. Now if you want to wait for that retracement to get a better RR, that's entirely your choice. For me, I like to enter once price breaks below this low. All right, now the second variation is that this leg right here is tall or large, as you can see here. So now I can't take my entry here. No, I need to wait for that retracement to minimize my stop loss. Now, another variation of this model is going to be like this. Are trading higher, and then here we broke structure. As you can see here, we broke structure. But here we have an SNDR, right? As you can see, we have an SNDR, which is the area responsible for breaking the structure, which is this low. Now here, I would wait for price to return to here. When I see this SNDR, I will wait for that retracement. All right, I will wait for retracement to here. And then I will take my trade. So that is the third variation. All right, so this is very important, guys. This is the details that you will need to pay attention to when you are backtesting. This is the third variation. Let's put this here. Now let's talk about the fourth variation of this lower time frame flip, and it will be like this. So what do you notice here? We have this break of structure, but we didn't return to the area right here, and we retrace to here, and then we create a new low. So we have another break of structure. Now you might think that this is the ideal entry, right? This is the ideal entry because we have a new low and we have a new protected high. But a lot of times you will see price violate this high, come back to the area, and then trade lower. I have seen this happens a lot of times, guys, and I'm going to show you this in the live trade examples. So this is a fourth variation of the lower time frame. Now for the stop loss is always above that lower time frame flip, that last high or that last low here or here. Always put it there. All right, so I believe that I have shared all the details regarding the first setup. Now it's time to move on to the counter trend setup. We're gonna wrap this one quickly because the lower time frame flip is the same, and also the variations here inside the swing point. So the counter trend, higher time frame zone, lower time frame flip, it will look something like this. Now, instead of taking with trend setups, all right, I'm going to take counter trend setups. So if we are in an uptrend, here, price will expand from bullish or current swing points, which is this one. As you can see, price taps into the range and then expand higher. This one also, price taps into the previous range and then trade higher. And the pullback will happen in most cases from previous swing points, from the previous trend, from the downtrend here. So once price taps into here, I will look for the lower time frame flip, the 5-second flip, this one right here, and then I will look to ride the pullback. So as you can see, this is a counter trend setup. Now let's talk about the variations of the higher time frame zone. I like to use unmitigated higher time frame swing points. So as you can see here, this zone here has been mitigated. We have a low, creating a low, and then retracing to this zone, and then trading lower. So this zone has been mitigated, but I prefer this, right? This zone has never been mitigated, and this will be a solid setup right here. Now, same for the 50% level. I will not always wait for the 50% level to get hit. Sometimes I will look for a flip here if it's aligned with the SNDR, right? If there is an SNDR somewhere around here, then I will look for that flip from here, right? It doesn't always have to go all the way to the 50%. Remember this. In most cases it will, but sometimes it will not reverse from the 50%, right? So same here. If price hits an unmitigated area to the left, then I will look for a potential shorting opportunities to the previous swing point, right? Now, you have to be very careful with the counter trend setups, because sometimes the trend is too strong, right? And it will not give you that pullback, right? Sometimes it will pull back just here and then trade lower. So these are not the kind of setups that you want to hold, all right? So quick scalps here and then here, you can look for expansions, riding the expansions. The expansions here will give you the highest RRs, right? Here will give you like a quick scalp, maybe 1-to-1. And everything we talked about the lower time frame flip, it applies here, right? So same thing here. Now, I believe that I've covered everything about these two setups. As I said before, my main setup is this. I will take like 6 or 7 trades using this one and maybe 2 or 3 using this one, all right? And now let's move on to live trade examples. And now transitioning into examples, live trade examples and examples from my backtesting journal. So first of all, we're going to go through these examples. I have only a couple of them. And the beautiful thing about this strategy, as you can see, although here I'm only taking 1-to-1s, but if you look at the right on this column, the trades went way above 1-to-1. So as you can see here. So if you want to build confidence, you can start with 1-to-1, right? Your stop loss, your TP will get hit quickly. And then after you gain some confidence in the strategy, you can look for higher RRs. Let's start with the examples here. And unfortunately, I don't have the 1 minute screenshot. I only have the 5-second, that's the lower time frame entry, right? But don't worry, I will show you later on in the examples from the backtesting journal. There I saved both the 1 minute zone and the 5-second flip, all right? So, because basically when I trade live, I record my session and then I will go later on and analyze that, watch that recording. Here, we are inside a higher time frame area, right? You can see that this is the lower band of that area, bearish zone, right, from the 1 minute. And here, we have this SNDR. So this fractal right here, this leg is the one that is responsible for breaking the structure. So this is the SNDR, or the supply and demand, responsible for breaking structure. Price traded all the way to here, and then it traded back to the SNDR. So as you can see, we didn't trade to the 50% area. This is like 15 or 20% of the zone. We didn't trade into the 50% of the 1 minute zone, right? And as I told you before, if that SNDR gave you that flip, you can take the trade. So here I took a trade here, right? But it was a loser. I did a mistake. So this is why I want to show you live trade example first. I don't want to show you like perfect entries and perfect hindsight executions. No, I wanted to show you the real thing, all right? So here, as you can see, I made a mistake. As you can see here, too soon and not the correct time frame confirmation. So here on the 5-second, as you can see, this is not a valid flip. It's obviously not a valid flip, but I did a mistake and I went down to the 1 second time frame and this was a valid flip. So this was a mistake for me and I took a loss. But what happened next is that, as you can see here, we are printing higher lows, right? And higher highs. We have this high and then we have this low. And then we have this high right here. And then we have this low. This low is valid because it created a new high, right? With a body closure. And then we have a low right here. Put in a low pullback. This is valid only if we close above the previous high. And we do have that here. We have a slight closure, body closure above the last high, right? So in order for us to look for shorts, we need this low to get broken. By broken, I mean we need a body closure below it. And we do have that here. We have a displacement to the downside. You don't need a displacement. Even if price closed just below here, it's fine and you can look for shorts. But here in this case, we have a displacement. Return back to where, as you can see, this is the SNDR, which is the area responsible for breaking this low. And I took my entry from here, right? And shorted this leg. And as you can see, exited here. And this one is, I believe, more than 1-to-1. My stop loss was here. So it was like, I believe it is 1-to-2. And price went way below here, right? I believe it created a new low. So this is the first example. Let's move on to another example. So here, as you can see, we have another zone on the 1 minute time frame, right? And don't worry, again, I'm going to show you examples with both the 1 minute and the 5 second later on the video. So here we have this low, and this is the high that created this low, right? And what happens next is that price broke structure to here, returned back, right, to the area, which is returned back to the SNDR, right? And I missed this trade. I wasn't in the chart, but price gave me another leg. We have another break of structure, breaking and closing above this high. This is a protected high, right? Return back to the previous zone, right? Swing point, and I took my trade from here and exited from here. Let's take a look to another example. This is a 1 minute zone, this one, right? And then here we have another flip, a valid flip here. Return back to the swing point and to the SNDR. And then I took my buy from here and exited from here. And as you can see, price kept going up and up and up. And this is another example. And here you can see that 1 minute zone. Even in the 5 second, you can see it. This is a small zone. This is why you can see it on the 5 second only. So this is a one leg on the 1 minute. We take it lower. We traced back to it. We have this low, right? Tapped into the 50%. And this is the low, the protected low. We broke above it, right? I'm sorry, we broke below it. Return back to where? To the SNDR. So this fractal right here, right, is the SNDR, or the area responsible for breaking this low. Return back to it. Take my entry from here, exited from here. And as you can see, we have another pullback and price kept going down. Another example, but this was a missed setup. So as you can see here, this is the zone, the 1 minute zone. But as you can see, it's also visible on the 1 minute. I'm sorry, on the 5 second time frame. So we traded higher. We came back to it. As you can see here, we didn't violate that zone, as you can see. All right. And where is the protected high? So let's follow structure. We have put in this low right here, and then this high, and then this low, and then this high, and then we put in this low, and then we have a break of structure right here. Return back to the zone, the previous swing point, and then price traded higher. We have another example. This is the 1 minute zone, right? Always the 5 second. We traded above, returned back, and in our case, this is the SNDR. So yeah, this is the SNDR, right? The area responsible for breaking structure. And as you can see, it gave us a nice scalp from here, but price went all the way to the 50%. We have unmitigated zone right here. So price broke above this zone here, and it has no mitigation. So we return back to it, and if we zoom in here, we have this low, we have this high, and then this low, and then we broke above this high. So I took my entry from here. This is the worst entry ever. As you can see here, price went all the way to here, give me this nice retracement, and then it traded higher. So if you took your entry maybe from here, from the 50%, or from this fair value gap, your stop loss here, this could be like a 10-hour trade if you hold all the way to make a new high. So a lot of zones will give you like this. So for example, this is a 1 minute zone, right? So this right here is a 1 minute zone. So here you're going to look for that flip, right? That's 5 second flip here. So if you have that flip, right, there is a good chance, and that flip happened like deep inside the zone. For example, from here, just like happened here, we are at the lower band of the zone. That 5 second flip could be the one that will send price to make a new low all the way to here. And this is what happened here, right? So a lot of times we'll see this, especially in an uptrend, in a clear uptrend or a downtrend. So this is something to think about, and you can enhance the strategy for a better RR. Let's see if we have another example. All right, we have another example here. This is the 1 minute zone, and we are on the 15 second chart. I don't have the 5 second chart, but it is pretty much the same as the 5 second. As the 15 second. We have this high, as you can see here. We have this low, we have this high, and then this low, and then this high, right? We have a break of structure, return back to the zone, to the swing point, and then we traded lower. And as you can see, this is the 1 minute zone, and price retraced back to the SNDR, the area responsible for breaking structure here. We have another example right here. As you can see, this is a 1 minute zone. We created a new low below this one. We traded above to the 50%. And as you can see, this is the SNDR, but we have no flip. So we're going to follow price. We have this low, we have this high, we have this low, and then we put in this high. So where is the valid low that we need, or the projected low that we need price to break it in order for us to look for sales? This one right here, because this one didn't create a new high, as you can see here. So this is the projected low. Price broke it here and came back to the zone, right? And then we traded lower, and price gave us more than 1-to-1. So this is all the examples that I have. Now let's take a look at the backtesting journal. So now let's take a look at a couple of trades from the backtesting journal, and we're gonna wrap this video up. All right. So as you can see, the setup is, if you filter by the setup, I have multiple setups. I have a higher time frame swing failure with lower time frame flip, but we're gonna focus only on these two. Sometimes I use these two setups, but I mainly use this one and this one. And as you can see, like this is 90% of the trades are from with the trend, higher time frame zone and lower time frame flip. As you can see, sometimes I take against the trend trades. So let's take a look, for example, this one. All right, so we have this zone, right? We have put in this low and then this high, this low, we have break of structure here, right? And then we put in this high, right? And then this low and then this high. And what happens next is that we break this low. So now this is with the trend break of structure, right? So now we are shifting from an uptrend to a downtrend. So this is with the trend zone. We have a break structure here. We return back, as you can see, to the SNDR, the area responsible for breaking structure here. We have it will look better on the 5 second time frame. So as you can see, we didn't retrace to the 50%. Let's zoom in here. And then once we tapped into that SNDR, right, we have a flip here. So this is the protected low, the last protected low that put in this high. We broke it here with a body closure, returned back to the zone, to the swing point, and then we traded lower. And as you can see, price created a new low and give us and continue the trend. Let's take a look at another example. So here we have a zone right here. We have this low and then this high. This is a zone. And let's take a look at the 5 second chart. So here you go. Are retracing to the upside. And then we have a flip right here. So I entered from here. The stop loss was only 10 points, so I entered directly without waiting for that retracement. And as you can see, price gave us a slight retracement to here, to the zone, and then we continue lower to create a new low. Let's take a look at another example. So this is a 1 minute zone here. This is all with the trend, right? We broke it here, we return back to the zone. And if we take a look at the 5-second chart, we have this low, right? The protected low. We broke below it and also below this one. We returned back to the zone and we traded lower. Price gave us way more than 1-to-1. Let's take a look at a losing example. So we have a zone right here, right? We return back to 50%. Let's take a look here. So this is the last low. The last high, protected low, protected high, displaced above it, broke this high, and then, all right, so this was a loser. Let's take a look at another example. Let's take a look at an example that is against the trend, and we can end this video here. So, all right, this is beautiful. The trend on the 1 minute was bearish, and this is a previous zone from the uptrend. And as you can see, it gave us a nice reaction from the 50% zone, a pullback. Let's go to the 5-second. So as you can see from the 5-second time frame, we have this low that we have this high that put in this low, right? And then we displaced above it, we broke it here, returned back to it, and then we continue higher. So here, as you can see, this is what I told you before. I told you that sometimes you will see this. So this is the last protected high, and you will see something like this. So as you can see, this zones right here hasn't been mitigated yet, and you will see like price give us a new high, and you might think that, all right, maybe I can take this setup from here, my stop loss here, and maybe you can take price with upside. But what happens is that you can see something like this, breaking all these lows, returning back to the areas that has not been mitigated yet, and then continue higher. So this is the case here. So I believe this is the end of this video. It was a little bit long, right? But guys, first of all, you need to watch the masterclass from dtfx channel to make sure that you are not trading a pattern, but you know what's going on in the market. So if you have any questions, please DM me on my Twitter account or leave a comment down below, and I'll answer you as soon as I can. Now, happy trading and good luck.